You family, thank you so much for visiting this channel. My name is Isaac Jonas and I like to talk about personal finance and investing. And today I'm going to share with you the major highlights that happened in the past week in the stock market, particularly in the US and Canadian markets. And also I will share with you what I think and what I've been doing in my retail portfolio. Basically, I invest as a retail investor. So the first interesting thing was that the market started on a negative territory as measured by the major indices like the S&P 500 and the Dow Jones. So in other words, the market dropped, and it sort of cautioned investors that the market doesn't go up in a straight line. So from Monday, Tuesday, Wednesday, it was down, and what I was actually doing was that for the positions that I have, I was adding more shares for the individual businesses that are undervalued, right? And what then happened was that on February 21st, NVIDIA, which has been one of the best performing stocks so far in the US stock exchanges, is that it recorded earnings and they beat the earnings. Year on year growth in revenue was 265%. In other words, it beat the expectations. The earnings per share that was expected was $4.64, and it ended up reporting $5.16, which was an 11.28% increase for the quarter four. So what it means, it is a very strong, revenue increasing potential. And then I also did a video to just analyze the business, the valuation, the financials, and also their earnings. And what I found is that NVIDIA is a very strong business. So what then ended up happening was that on Thursday, the market went up. I saw the S&P 500, it also went up, and other major indices. And investors continue to be cautious, but the market continues to go up and up. And what this means is that as an investor, I am cautious, because if it keeps on hitting the record high, it might correct anytime, right? So the market doesn't go up in a straight line. And then the other interesting and important highlight was that the Federal Open Market Committee meeting minutes were made available, and it shows that the Feds, because they control the monetary supply in the US, what it means is that they said they are cautious and they remain cautious, and see they want to see if inflation is going to drop before they cut rates. So in other words, they might keep the interest rates as they are, or increase or use other instruments like money supply to mop out liquidity or to increase the money supply in the market. So what this means for me as a retail investor is that it is beyond my control, but I look at it from the point that either way, whichever direction they take as the Feds, I am comfortable, because if, let's say, they increase the interest rates and the market drops, what it means is that if I have some cash, I know that there are some fundamentally strong businesses and the exchange traded funds that I believe in. Let's say exchange traded funds like SPY, XUS, that trade the S&P 500, and they drop by 5-10%, I can potentially add more shares. So I'm keeping some cash, and also thinking of the fact that if the market drops, so I'm looking at potentially, increasing my shareholding in bonds, and also buying some shares for the VITs to hedge my portfolio, because the VITs, it shows the volatility, right? And then what it means is that if I buy the exchange traded funds that tracks the volatility, if the market drops, let's say the S&P 500 drops, it usually goes up. And what I can do is I can potentially cash out and buy some shares for the S&P 500 exchange traded funds and other businesses that I believe in when they are down, right? So that's my thinking, because I believe that the market doesn't go up in a straight line, and also it presents opportunities, right? So either way, I don't try to forecast what's going to happen in the future. I deal with what is happening, and I understand that as an economist, let's say if interest rates increase, if the strong job numbers come out, what might be the likely scenario, and whichever case, that's the way that I think. I don't just focus and hope on one particular scenario. And then in terms of key numbers, that are upcoming this week. On February 20th, the GDP numbers quarter on quarter for Q4 will come out, and this focus for this number is 3.3%. So economists and policymakers they believe that the economy might have grown by 3.3%. So which might be a good thing in terms of the politics, because there's an election this year, right? And also the initial job claims, the numbers will be out on 29 February at 8:30, and then the manufacturing PMI will be out on March 1st. And these numbers, they are just important because they show that the economy, how the economy is performing. And the policymakers, they base their decisions on these numbers. So for me, I understand these numbers, the implications, right? If the economy is so strong or it's too hot, that's when the policymakers like the Federal Reserve Bank or the federal government, like in the US, like the Treasury, that's when they act, using the various instruments that they have at hand. So as an investor, I look at it from the point that what are the opportunities. So right now I've been researching on some, stocks, including NVIDIA. I did a video to show, my research on that, so you can check it out. But also other opportunities in the market, because there may be some companies that may be undervalued, because I want to invest for the long term, right? But I have to wait, and if there are major events and there is panic and fear, that's when I start to add some shares on those particular positions. So I am keeping about 30% in cash, and also the other 70% is invested in the market, including in other securities that are not correlated. Because if the stock market is going up, right, you also want to hedge the portfolio to say if it drops, there may be other, securities that may go up, like gold, for example, or the volatility index that usually goes up when the market drops. Because if there is a lot of fear in the market, some investors, they might sell off. If it goes up, then I can potentially cash out and then buy the S&P 500 and other exchange traded funds and individual business that are undervalued at a discount. So that's my approach. I don't try to predict the market. So in conclusion, I am focus on the long term. So what I do is, if I have businesses, as I call the stocks, that are undervalued and they drop below my valuation range, I start to add shares, right? And I don't own many stocks. I just have a handful of stocks that are particularly doing really really well, mostly in the US. And also I've been looking at the Canadian market as well. So that's it. And I thought I would just share these major highlights. And NVIDIA remains the stock that is making a lot of interest for investors. But for me, I'm staying out right now. It's going up. I would rather, wait. Let's say if it drops to some valuation level, 600, 500, maybe I might start to add positions on that. Right now, I am not chasing after the stock going up, and that's my policy. There is always going to be another opportunity. If I don't get an opportunity, I own exchange traded funds that own that hold NVIDIA, so I have exposure to it as well, so I can benefit if it grows up. So that's something that I look at, and I also did another exchange traded funds video, so you can check it out. That is on my YouTube channel. Thank you so much. If you haven't considered subscribing, please do so, so that you don't miss content like this in the future. Have a wonderful week, and may the markets be with you. All the best. Thank you.